Not every up close candle or down close candle is a bearish or bullish order block. Yes, that's very true. In this video, I will be taking you through what I consider to be a high probability order block, and I believe at the end you will come to realize the reasons why your order block is failing. So just spare me some few moments of your time and let's walk through together. Now, what are order blocks? These are specific areas in the market where the market makers, and when I talk about market makers, I'm referring to the big banks, institutions, and what have you. They are areas that they have previously executed their buy or sell orders, resulting in significant price move. Now, these areas in price have the potential of becoming important support or resistance levels, which can serve as entry or exit points for retail traders. Now, another block can be bullish or bearish in nature. A bullish order block is a down close candle or series of down close candles formed at a key support level. It can be an old low. And a bearish order block is an up close candle or series of up close candles formed at a key resistance level, in this case, an old high. Now, what do I consider to be a high probability order block? A high probability order block will normally form within a premium or discount level. Yes, normally that means there are cases where this criteria will not be met, especially when the market is highly volatile. You don't expect price to always retrace into a premium or discount level. Now, a high probability order block should also raid liquidity or take part in a liquidity raid. It usually also comes with a displacement or a fair value gap, and for it to be validated, an opposing candle must close above or below its opening. Now we are going to consider a bearish order block in this video, and for time's sake, we will not go through the bullish order block since the reverse of whatever we are going to discuss with the bearish order block can be applied in a bullish market condition. So when we consider this gold weekly chart, we can see that this current week readed the previous week's high and then started reversing. And as you can see here, there is an SMT that was formed with silver. Now, when this reversal began, what am I targeting? We can target the previous week's low, and as you can also see, there is a weekly internal range liquidity here that price can move towards or can serve as the draw on liquidity. Now, when we go down to the 4-hour chart, we can also see here that price after series of consolidation and the rate of the previous week high, it's also inverted an internal range liquidity here and then came back to retest that area before moving lower towards our 4-hour draw on liquidity. Now, let's observe something on the 1-hour chart here. Now, this is what I consider to be a high probability bearish order block. As we discussed, it must take part in a liquidity read or it must read a liquidity by itself. As you can see here, this was the last up close candle that was formed prior to the liquidity read of the previous week's high. And then remember we talk about validation. An opposing candle, in this case, this bearish candle closed above the opening of the up close candle that took part in the liquidity read. So at this point, this order block was validated. Now, as we can see here, it's also caused a bearish move, leaving behind an internal range liquidity or a fair value gap. Now, as you can see, after this order block was validated, price retraced into it at a premium level, and from there, price moved swiftly towards the external range liquidity here. Now, after that, let's look at what happened here. After this raid into the 4 hour, the 1 hour bearish candle, you can also see some series of up close candles that were formed here. Now, as we discussed, an order block can be just a single candle or series of candles. Now, when price descended lower towards our external range liquidity here, there was a new dealing range that was created. Now, this becomes our new dealing range high and then our dealing range low. And then after this dealing range was formed, we expect that price will retrace into a premium level before going lower. Now, when it retraced into the premium level, you can see that this series of up close candles were tapped into. And as you can see, these bearish order blocks also left behind an internal range liquidity. So price came back beautifully and then tapped into this order block before moving lower. And then as this candles or series of candles proceeded lower, you can see another block has also been created here. And this up close candle was the last one that was formed prior to the liquidity raid into our previous bearish order block. And as you can see, price came back and then tested that area once more. So this is what I consider to be a high probability bearish order block. And as I indicated, you can apply the reverse in a bullish order block and it will work perfectly. Now, unlike other traders, I don't go around looking for trading concepts to make videos out of in order to seek social media approval, because that's not what struggling traders want. Every video I make, every concept I cover is just to provide you with a microscopic view of my trading strategy. And I strongly believe today's video has given you a glimpse of what I consider to be a high probability order block. And I know you now understand the reasons why your order block is failing. If there is anything you are unclear about, kindly leave a comment below to get the needed assistance. The channel still remains AK Trace, and if you enjoyed this video or any other content shared in this channel, kindly like and subscribe to help the YouTube algorithm push this video to the right audience. Good luck and stay safe.